Welcome to Pioneer Mindset, a place where we challenge our mindset and address the discomfort in both business and life by finding clarity resulting in bold conviction. I'm your host, Garrett Ruskamp, fifth generation farmer, husband, and father from rural Nebraska. Whether you're navigating frustration from past decisions or worry about the uncertainty you face today in your business, we're going to learn from our struggles and take on new challenges with a resilient mindset. Join me as I share my journey of struggles I faced in agriculture as a farmer and family man. I'm ready to dive into honest conversations to tackle the mindsets surrounding key issues that rural ag business owners face that will ultimately help you gain control, leading to a profitable and sustainable business. Let's adapt to Pioneer Mindset and get to it. Welcome back to Pioneer Mindset. This week's episode is going to be a guest episode with Landon Shafer, and I'm excited to introduce him and talk about crop insurance. I think this is going to be a really important topic to talk about this time of year as we get into sales closing coming up into March 15th, and especially for row crop producers, this is a very important time of year to be really discussing this topic around crop insurance. And so, Landon, without further ado, go ahead and maybe explain a little bit about yourself, who you are, where you're from, and what you do.
Yeah, Garrett, no, I appreciate it. Currently, I'm burning it at both ends because we are coming up on sales closing. So I'm very busy at this time. And about myself, I guess I've been doing crop insurance for about 16, going on 17 years now. I did grow up on a family farm. And, like all farm kids, we have a decision to make whether we stay on a family farm or go cut our own path. And came from a background with my parents. Like I said, my dad farmed. My mom was a commodity broker. And then she also had some crop insurance in her background too. And so knowing those three things, crop insurance ended up kind of being the path that I chose to go down. So, when there's a fork in the road, you make a decision to go down one of them, and that was it. So currently, I'm in the sales role. So a lot of my time right now has been educating agents on the updates for the year, getting them geared up for quoting and exploring those different, coverage options for farmers. But my background to crops started as crop adjusting. So spent a lot of hot summer days walking the fields, adjusting hail in the wintertime and the fall, measuring production, whether that's appraisals, bin measurements, gathering settlement sheets. And from there, the journey then took me from working claims myself to managing a crew of about, 21, 22 adjusters, kind of had its ebbs and flows, as far as how many guys there were. But more from the company standpoint, managing adjusters, managing losses, making sure everybody was getting things done correctly, right? Paying exactly what they need to, no more, no less. And I guess naturally, not everybody sees it this way, but in my mind, the next step in my career path was to the sales role. So some guys really love to wear that claims hat, and myself, I was looking to make a little change. And so sales has kind of been where I've landed here the last 7 or 8 different years with Farmers Mutual Hail Insurance of Iowa.
Cool. That's awesome. And I think especially as a sales agent or just even a crop insurance agent, the person that the farmers are talking to, producers are talking to, I think it's important that you've seen the big picture. You've been all the way from the bottom and worked yourself up. So you know how the claim process works, how the adjusting process works, and all of that. And so I think that can be a really big benefit to the current position that you're in.
Absolutely. Yeah. Because crop insurance, the farmer-facing part of it is that adjustment experience, right? And so if you've got that background and the expectations of that farmer, you're able to help that agent along, whether they're new or experienced, and be that liaison between them and the AIP, right? The approved insurance provider. So, I've wore all 3 hats there.
Yeah, that's good. That's awesome. So just a little bit of background about, our affiliation together. Full disclosure, Landon is my current crop insurance agent. And we've been really good this experience last 3 years that we've worked together. This is going to be, I guess, our 3rd year together, I believe. And so we kind of met through a mutual network and just really liked the information that I learned from Landon. And that was one of the reasons that drew me to him. And that's why I think you'd also a really good resource to get on here for all the listeners to just learn a little bit more about crop insurance. And as we know, sometimes this can be one of the least favorite parts of the operation. Feel like something that we have to do, or just feel like something that's going through the motions, or there's so many different options out there that we get overwhelmed. And so that's why I just wanted to kind of continue this conversation on and really dive into some different ways that we can really be more knowledgeable about the crop insurance industry in a whole and how it can work for our operations.
Right. Yeah. I mean, there's a lot of different options out there that can meet everybody's needs. And the blanket approach of taking the same thing you've always taken every year, even though our revenues, our APHs, our crop rotations, I mean, those are all things that move and adjust with, our decisions for the year, right? And so our crop insurance needs to be that active decision as well and not just a passive reaction. So I almost wish crop insurance could be that first decision we make because it really is, in my mind, the staple to making the rest of your decisions. If you know what your guarantees are going into the year, you can really start making some decisions from there.
Yeah. And I definitely think that's part of this conversation today is I want to get people to shift their mindset around crop insurance. I think you're kind of the same way is we just have this set in stone path that we think that we need to follow based on what we did last year. And it's kind of like I said, oh, we've got our entire 95% of our plan laid out for the year. Well, by the way, March 15th is coming up. We should probably pick a plan, figure out what we're going to do. So that's why, yeah, I definitely wanted to kind of dive into this. And you mentioned that there's just lots of different combinations. And that's to where we've lived out some of this. Kind of to take you back a little bit before we actually started working together. Nothing against our old agent, but our old agent was so knowledgeable that we actually had a hard time understanding as to what our best options were. And so, meaning that almost a book smart person and just couldn't relay it back to our operation and what was going to be best for us. So at the end of the day, we'd sit in the office for an hour and we're like, well, I'm just going to go with what we did last year, and kind of that same thought and that same mentality process. So, that's where, yeah, I want you to kind of maybe dive into some of the different things that you've seen work. And we don't have to go too deep into this. As we all know, this can be a really deep dive down the rabbit hole and it's very specific to each operation. But I think there's some things that people don't realize that are some different options out there. And so I guess you kind of take it away a little bit and we'll just kind of see where this goes.
Yeah. So I think the first thing when it comes to making some of these decisions is whether it's the agent or whether it's the farmer, right? But there's some shared responsibility in education or learning what these different plans do. Because without full transparency from that farmer, the agent really can't make great decisions to help you out either, right? So just like whether it's your grain marketing or your bank lender, everybody needs to be very transparent so that the best decisions can be made going forward. And I think part of the problem in crop insurance is, yeah, there's lots of numbers involved in crop insurance. And if you don't know where they're coming from, it's tough to make a decision. After some education of knowing what both parties need, we can drill down to get more focused on some of the numbers we're looking at. And when we know our numbers, we can take all the emotion out of this decision. And if some of that emotion is removed from these decisions, then there's a lot more options that come into play for your coverage. Maybe we don't have to be so focused on spending an extra premium to be field by field or optional unit based in our decisions, right? Are we so worried about each and every field? Or are we more worried about a crop and what that commodity price could do, what our yield in our area could do? Because there's subsidies that we can take advantage of. So whether it's optional units, enterprise units, and something that I'm a really big fan of is leaning into subsidy and looking at some of these county-based plans with, we'll call it a stack of some other private products and really trying to focus our coverage, not just covering our expenses, but also maybe taking the opportunity to capture, some coverage on our margins as well. So I really went quick there. If we need to, we can clarify some more of that. But I think the best thing we can do is just look for some of this subsidy to go get as much coverage as we can and guarantee some nice revenues for producers.
Yeah, for sure. And I think that's important to dive into the subsidy side of things because, whether you want to argue that crop insurance should or should not be subsidized, at the end of the day, it currently is. And if you're not taking advantage of it, everybody else around you is. So I think just trying to pick the coverage that has maybe the most subsidy or that's just going to make the most sense for you is another play into that we need to keep in mind. And I also liked how you mentioned that basically stacking some of these different plans together. When we were at our old agent, like I said, nothing wrong against them, but that's the one thing that we did not have is the ability to kind of stack some of these things on top of each other. And even when it comes to the individualized, we talk about enterprise unit versus optional unit. real quick, let's pause on that for a second. If people don't know the difference between those, maybe real briefly explain the difference between that because that can be a pretty big thing that we need to really know.
Right. So an optional unit structure policy is we're looking at ensuring the acres within a section. Okay. So that would be my optional unit. You could have multiple fields within that section, but that would be an optional unit. That'd be the most granular level of coverage that you can get. And so, on that policy, you're going to have multiple optional units. If you have farms and acres in 6 different legals, you'll have 6 different optional units. And those optional units can be broke up more by different crops or different types of that same crop. Okay. When we look at enterprise unit structure, we are looking at insuring that crop by that type. So we are insuring all of our corn. It could be, again, 6 sections that we have corn planted in, and all of that corn falls under that one enterprise unit. Okay. So to trigger a loss, all of your corn would have to fall underneath that level of revenue trigger. So if you're a 75% level policy, if your farm falls below that on all of your corn, then that's when we would trigger a loss. So there is less opportunity maybe to earn a number of payments in any given year when you do that. But the subsidy advantage is so great that a lot of producers are starting to step back and say, you know what? My banker is happy as long as I reach a certain revenue. And if I can save a lot of premium, I'm going to maybe have that same mindset as that banker and say, hey, for this smaller amount of premium, right, subsidized up to 80%, I'm willing to sustain shallow losses on a field here and there, knowing that my farm is still reaching a threshold that I'm looking for as far as revenue generation.
Yeah, absolutely. And I appreciate you explaining that. I didn't mean to dive too far into the weeds. I just think when it comes to crop insurance, those are a couple big terms that people really need to know to make sure we're talking about the same thing. So that's one thing to definitely keep in mind as well. And so you mentioned something there when it comes to maybe the banker making sure that you have crop insurance. We'll definitely get into that, but I think that's one that, especially we get into this next year, for most farms and their operations, could be tight. Even getting their line of credit renewed could be a problem. So this is something that your banker's probably going to be paying more attention to, especially here in the Midwest where we're at. It's bone dry, right? There's not a lot of moisture in this ground. So bankers are going to be concerned that if they're going to be putting eight, $900 to $1,000 an acre out of inputs out there for your crop, that we've got at least something in place to cover that and to make sure that we can get some sort of return on that. So that's why I think it's really crucial to start with this crop insurance to figure out what we need and what kind of coverage is best going to fit our operation.
Yeah, and I know the bankers are definitely concerned, right? And worried about the level of coverage guys are taking. And I can always see when bankers feel that there is the most risk out. And it's a year like this, and I'm seeing lots of requests for assignment of indemnities already. So I know crop insurance and some kind of guarantee is top of mind for those guys right now because they're putting a lot of dollars out there themselves.
Yeah. Yeah, absolutely. All right. So let's just talk about, how would you describe some of the MPACI or kind of the multi-peril crop insurance to like the farmer or the listener for those that maybe don't have such an in-depth knowledge there? I know we've talked a little bit about this, but like insurance is something that the bank might require, but like let's just dive into this just a little bit to really explain from a high level overview.
Okay. There's different types of insurance. The most popular one, right, that most farmers carry because their bank requires is the MPCI crop insurance policy, right? Multi-peril crop insurance. And that's an act of God policy. So whether it's fire, drought, excess moisture, hail, just anything that could be an act of God, that's what that policy is covering. And it also has a price component built in there too. So it does ensure revenue. Again, that's a combination of your yield and then that price that is set on those different commodities different times through the year. And I know we're talking to a pretty big group. So in some areas on some crops, maybe that revenue component isn't part of your insurance plan. But for the big crops that we talk about a lot, corn and beans, the price comes in there and it's a big part of this. And then there's also crop hail and wind. There isn't anybody that isn't going to have that as part of their discussion as well. So those are named perils, right? We're insuring that corn or soybean crop, wheat, whatever it might be, from direct hail loss or from direct wind loss. And again, that's just a dollar plan where farmers can make their election of coverage as they see fit on a number of different deductibles. But yeah, I do feel like maybe a myth that needs to be busted is it isn't just something that somebody should buy because their banker says they should be buying it. When I look at crop insurance, again, you can call me biased here and putting on my sales hat too much, but I look at it as the only thing on that farm that is going to guarantee them revenue. They've got a yield history, and then we've got this price component in here. And whether they raise that crop or not, they've got a revenue guarantee. Okay. So I like to say, hey, once you sign that application, we know you're going to have some sort of guarantee. And once we fill out that acreage report and we know where acres are planted, we've got grain in the bank, or I guess I should say grain in the bin. And they can take that and know that they can structure an aggressive forward marketing plan with their grain merchandiser or their grain broker. So I don't look at it as insurance so much as, hey, this is revenue generation that we can take and start making some business decisions. So I guess we'll call that a myth bust, right? It's just not insurance. It's just not an expense.
Yeah, and real quick, I want to hit on a couple things there because, especially when it comes to guaranteeing revenue, I think kind of to go back to where current farmers' situation is, looking at this next year, thinking that it's going to be a tight year, we need to make sure we can guarantee that revenue to some extent. Now, from a global view, when it comes to doing, say, like a projection or break-even projection, this is why I think it's crucial to know exactly what coverage you're going to be taking out, because this is what helps us. Okay, if I can guarantee one, my revenue, but mostly also just kind of my yield, to know what my break even yield is, so I can really take that information and build out my projections. So whenever I do that for my break even projections, I'm using my guarantee, so that way I have my starting point. Now, if I go above that, that's gravy. I think that's great. And I think it's to know where your operation is going to fall if you go above, say, your guarantee. But you need to have a starting point there. If you all of a sudden you're putting you're using your APH for your yields to figure out what your break evens are, and you go below that and you're at your guarantee, well, there's going to be a shortfall there. That's why I think this whole, protecting your revenue. Yes, we're talking about protecting yield, but we're protecting the revenue of the operation. That's why it's extremely crucial here. And this all kind of comes down to what you said is a business decision. This is a business decision. It's not emotional. It's not a one off, or I'm just going to go with what I went last year. We need to utilize this as a business decision.
Yeah. And it's not just for your crop insurance or for your revenue or your guarantees at the bank, right? We also have to know our elections prior to making our farm bill decisions as well. So we really didn't get into it just yet, and we might hear more in the future, but there are some county-based plans that, depending on how you see those fitting, may or may not allow you to take certain farm bill disaster elections. And I hate to say it may or may not, because if you are looking at some of these county-based plans, it doesn't mean you can't take a disaster plan with your farm bill or make an election at your FSA office on your farm bill. It may just corner you into taking one over the other. So we'll talk about supplemental coverage option. I'll just name it here real quick. But if that's a coverage you're looking at, you can't take your ARC county or ARC individual at FSA. You need to know that you have to take the PLC, the price loss coverage option, at your FSA office. So all of these elections on your crop insurance, it goes further. And so there's constantly changes to all of these plans, and we need to know how that fits together every year. And so I will say one nice thing that FSA did, or USDA, is they made a change to the election for your plans at the FSA office, whether you're going to take ARC or PLC. They did push that back to April 15th. So that does give us a little bit more time to make our crop insurance decision, not first, but in line with, your elections at the FSA office, and gives you a little bit more time to make those decisions, get that submitted there. Because that is an annual submission.
That's good. That's actually news to me, to be honest. And so that's good to me because, like you said before, that at least allows us to explore what options are going to be best for us for crop insurance. And so, like you said before, not to get too far in the weeds, but if I want to take SCO, I need to make sure I've got the right farm bill selection there and coverage from there on the county based side. And so there's some things that really intertwine there. And that's why I think it's really crucial to have a good crop insurance agent or somebody that knows this information in your wheelhouse to say, hey, it looks like this might be, say, your best coverage. This might be your best option here. So this might help you make that decision on which election you're going to take from the county side of things. So that's another reason that we're talking here with this conversation, is to really kind of keep that in mind, because again, that's just another decision that the farmer, the producer is going to have to make. And so we need a good way to help remove some of the emotion from that decision or just even a guesswork when it comes to making that overall decision.
Yeah, and you mentioned guesswork. I know one word that I always hear with crop insurance decisions is it's just a gamble. You pick one and you take a gamble. And maybe that word is even played at that farm bill level as well with ARC County, ARC Individual, or PLC. None of these are gambles or guesses, right? It's an educated guess because we know our numbers. And so if we're making that election at FSA, we're going to decide between PLC or ARC because we know what our base acres are at FSA and our PLC reference yields and all the prices and revenues that are set there over a 5-year Olympic average compared to what we plan to do on our farm this year. And if those numbers aren't just lining up like we'd like, yeah, we're going to put more of our emphasis on crop insurance. And then our farm bill election will be a secondary decision. Now, 2025 is a completely different environment than 2024. And so, I think everybody will need to step back, look at all of those different numbers again, and we may make a different decision on our elections, on crop insurance, and our FSA decision that kind of marry to each other. And we're probably going to do something different this year than last.
Yeah, and I think that's important because we've just mentioned this before, is we're not going to do the same thing that we did last year because our environment has changed, the prices have changed, the outlook has changed, everything about our current situation has changed from last year. That's why we don't want to just get stuck in that same rut of, well, I took 75% coverage last year. I took wind and hail and at this coverage level. And it just seems easier to just do the same thing. Just sign me up for the same acres. This is what I've got. Let's run with it. And at the end of the day, that's not going to serve you or your operation. And so that's a very good thing to keep in mind there that things have changed. So we need to change as well.
Mm-hmm. That's right. And as well as me, margins are tight this year. And so with some of the narrowest margins we've seen in a number of years, I think our insurance is going to be even more important to make sure that we're at that right level, making those different elections on some of our county-based plans. And there's also, we have to have discussion around hail as well. In a number of states, there's been a lot of pressure from reinsurance that has caused these approved insurance providers, right, the crop insurance, to increase some of the hail rates. We've all seen it, some states more than others, how much our property insurances went up. Well, the reinsurance companies started there, but now that they finished up there, they've came to crop insurance as well and say, hey, we've got to start seeing some more break evens on some of these policies that we're writing. Because it's no secret, a lot of the private products are wrote at a higher loss ratio, trying to accompany that or get that multi-peril policy to attach with it. And so loss ratios have been pretty horrendous in a lot of areas. And so not to forget about our private products, but we may even need to say, okay, we've always taken this deductible on our crop hail. Well, with these increased rates, does that make sense? And a popular topic that I've been trying to drive here of late is we'll back up a little bit. As we go from optional units to enterprise units, right? If we go from field by field protection to crop protection, maybe we need to look at maybe some of the more traditional deductibles. Because essentially when you go enterprise units, you're losing your individual hail protection on that field. And if we've been buying coverage where we're just insuring the top end, that worked great when we were an optional unit. But now that we're enterprise, I think we got to start maybe looking back to some full coverage and even some deductible plans so that we can get more coverage out there. Because if we don't have a price loss on our multi-peril policy, and if we don't have a yield loss on our multi-peril policy, we could suffer that big yield loss due to crop hail, and we may need full value of that crop insured by our hail policy, particularly here in Nebraska, right? Hail and wind drives all of our conversations. So not to just get hung up on multi-peril so much, but there's some decisions that need made on our crop hail as well, because it is going to cost a little bit more this year.
Yeah. And unfortunately, like you said, that's where, from a business minded person, putting on my business hat, farmer hat, thinking about when it comes to insurance, you said it's going to cost more. And that's one thing that I think people don't always consider, or maybe they consider too much, is they're just putting all their weight on the cost, trying to figure out what they're actually going to get out of that investment of the crop insurance, especially when it comes to wind and hail. We talk about something that you might see once every 10 years, you might see it 2 or 3 years in a row. And so it just really depends. And it's so unknown. I think that kind of goes back to what you're saying before. It's like, well, this is all a big gamble. Well, at the end of the day, the gamble, in my opinion, is going to be the weather, whatever the weather decides to do. And you're going to take that gamble whether you take the insurance or not. So I think the more of the gamble is just going into a blind and doing, like I said, the same thing you did last year, or basing your decision off of price only, price of the coverage itself. So lots of factors to consider here. And I know we can really dive into the weeds, but what else do you think is kind of important as we keep this conversation moving that we need to really be thinking about when it comes to deciding our, crop insurance coverage levels, or even some different options that we throw in there and different things like that?
Yeah. Might just say that I really like your statement there on looking at value from your insurance, right? I've even passed this along to different crop insurance companies, but it kind of bugs me a little bit because when you look at a quote that these companies generate, premium is usually the first thing that populates when it should be value. Let's chase a value and then we'll decide later if that's a premium that we can live with, right?
Also, like I said, another hit on that real quick. When you said you talk about premium, and that's exactly the way that we were with our old agency. I was the same way. It's like, oh, let's look at premium. Well, the premium is about $40. And you're like, jaw drop sort of thing, and just trying to figure out how can I actually make this work, or how is this going to be of value to me as the producer, the farmer. But then we look at, okay, what are we actually insuring? Okay, we're actually taking a higher guarantee, which means we can maybe market more bushels, and means we can sleep better at night when it comes to knowing that we're actually going to have a higher guarantee of revenue, help our relationship with the bank. There's a lot of things to consider there other than just the premium that we're going to be paying. So that's a really good point that I wanted to hit on before you continue.
Yeah. And just to kind of keep this moving, since we are nearing March 15th, to make this decision, some things that we're going to need, more factors that we'll want to consider is what is our break even on the farm? So if I'm a producer, that's the first thing I'm coming in with because your agent's going to have all of your APHs and can quickly figure out your guarantee. I got a little bit of a beef to pick because I do think there is way too much broad stroke quoting out there, whether it's using MPCI rate cards, things like that, to best help that producer, right? To get return on that relationship. If a farmer can bring in their intended acres, that agent can pre-populate that policy by doing an intended acreage report. When an agent knows that, they can show exactly what those guarantees are and make that better decision. So knowing your break evens, knowing your planting intentions, right, by crop and by field. And then we can start looking into what level of risk that a farmer is willing to assume himself. So there are all of these different deductibles out there and they all come at a price. I do think there's value that can be found in all of them, but different producers are at different levels of risk, right? Whether you're a young producer or whether you're a really, we'll call it experienced producer, right? Maybe nearing retirement. Do I feel that either one of them has less risk or more exposure to risk than the other? That's a discussion that I think is there to be had between that farmer and that agent. But I would challenge whether you're a new producer or one nearing retirement that nobody has any more or less tolerance for risk. I mean, I wished I was near retirement and a farmer and I could say, well, I think, since this is my last year or two, maybe I don't have as much risk. I'm not going to buy as much crop insurance. And so again, it's always up to that farmer to decide, but I would challenge to say, hey, you've got this nest egg that says you're near retirement and your numbers say you are close to where you can do that. Why risk anything? So if you can capture a bunch of insurance to make sure that your nest egg is always going to be there when you decide to retire, I mean, all the better. And so there are all these tools out there and everybody can just, assume how much risk they want through the year. And I might just throw a little bit in there. This isn't just row crop. I mean, we have forages that can be insured. We've got livestock at just crazy high prices. And everybody with livestock, in my mind right now, man, we've got insurance policies out there, again, with subsidy that we can go capture that price put. If I can set a floor on my livestock revenue and what I'm guaranteed, man, I think that's a powerful tool. So let's not just sleep on our corn and beans here, or definitely not sleep on our livestock, and know that there are LRP policies out there, or LGM, if you want to insure your livestock revenues and your gross margins on livestock as well. Swine, dairy, whatever it might be. There's getting to be a lot of options, and I think crop insurance is at the best place it's ever been to provide that safety net for a variety of farmers at different, we'll call experience levels, whether it's a new guy like you or an older guy that we could be closer to retirement.
Yeah, absolutely. At the end of the day, I think it just comes down to each individual producer, what they're wanting to assure and what risk they're willing to assume. I really like how he really phrased that because at the end of the day, going out there, planting the crop, investing everything that we have into it, there's going to be some risk involved. And we all know that. I mean, but that's the gamble, in my opinion. The gamble is not choosing what insurance or what coverage level that we're going to take out on that crop. So just really knowing, what are we comfortable with? What are we willing to sleep with? Do we want a higher guarantee or a lower guarantee? Maybe some different options for to really kind of offset some shortfalls. What are we actually after? I think that can be the hard part that sometimes farmers or producers cannot answer, have a hard time answering is what kind of coverage do we want? And we don't always know. And I do think it comes down to you can't hardly build out a coverage level unless you have your projections built out, unless you have your break evens established. So you know a starting point. You can know whether this coverage level is going to be better for you versus that coverage level. So I think that's probably the key there that I think most people need to be focusing on, especially right now, especially before you make that decision, is know what your actual break even is, or at least have a general ballpark. And so to help you make that unemotional decision the best that you can.
Yeah, you've nailed it. With all of that information, I think making your crop insurance selections after that is probably one of the easiest things you can do.
Yeah, for sure. So I guess from your standpoint, do you have anything else to add to this conversation today or anything that you'd like to hit on that we did not discuss?
No, just the biggest thing is I know there's a lot of producers, and not to come down on them, but they just do the same thing from year to year. And it may be the most informed farmer that knows his numbers may still make that same crop election every single year, but they stayed with that same coverage for a reason, right? There was a lot of intention in that decision. They know their numbers. Maybe it didn't change from year to year, but they know why they made that decision. So that's just what I would like to see for all producers, right? Is they're just making that active selection, even if that same election is the same one year in and year out, but they know their cost of production. They know their guarantees based off of their crop rotations. They can make that decision by March 15th, and then they can just go to work. They can take that summary of coverage. They can go to their grain merchandiser and start making some decisions there just to make this full circle and have some success.
Yeah. And I think kind of my driver to hit home there is I think a lot of producers, especially this year, and we say this every year because every year is the hardest year we've had to go through, but especially this year in 25, looking at how margins are going to be tight. We want to know what we can do to survive, but also, we always want to thrive. And so if you want to be kind of the top producer, the one that's going to be able to weather this storm the best that you can, I think that what this comes down to is being adaptable and being progressive. So if you want to be those two things, ask some questions. Ask some questions to your current agent. And if your agent can answer those questions, well, then maybe you need to at least try to find somebody else or try to do somebody that's going to be in your wheelhouse to really help you get the coverage that you need. And I think that's just going to come down to willing to be adaptable and progressive, especially when it comes to, crop insurance. Like I said, usually kind of a forethought for us. Usually the last thing that we decide on, or we wait till closing's March 15th, we're probably going to wait till like the 12th or the 13th to decide. So let's be progressive on this. Let's be trying to plan out some different coverage levels to see how it's going to work for us. This is kind of my takeaway, especially from a farmer standpoint. These are the things that a guy can do to really do the best that we can to set this operation up for some sort of success going into this next year. And I do think, we've had just from a marketing standpoint, this is another thing we didn't hit on a lot, but man, if you've got the ability to know how many bushels that you're going to be able to raise, that gives you a lot of power to be able to go ahead and forward contract some of those. And I'm looking at some of the recent price activity that we've had. We've had a pretty good uptick from the beginning of the year. Let's take advantage of this. Let's go ahead and maybe do some forward sales and let's know what we have and show the bank that we're being progressive and trying to do something to take control of this next year and to basically to maximize our profits the best we can. But all kind of stems from the decisions that we make and the questions that we ask of the people that we work with. So I think it's very important to ask those questions and try to learn the best that you can. And so we can make good, informed business decisions.
Yeah. And I'd like to, just extend myself out if anybody has any questions or would like to have some discussion around this more on a one-on-one basis, they can sure reach out to me as well.
Yeah, absolutely. And that's a great point. As we kind of get to closing this out, Landon, where can people find you or kind of get a hold of you if they so choose to?
Yeah, if they want to reach out with a phone call or text message, they can reach me at my cell phone number. That'd be 402-506-3109. And then out to my personal email address, which is just landonshafer@hotmail.com. So that's LANDONSHAFER@hotmail.com.
Perfect. And we'll have all that information on the show notes. And I do advise if anybody has any questions about this and don't want to, for some reason, reach out directly to Landon, reach out to me. And I've worked with Landon. I might be a little bit biased, but truth be told, he's helped our operation out a lot. And kind of a little side note here before we close this out, this will be kind of our third season together. We worked with each other last year and then in 24 and then 23. 23 was a year that we had losses on the farm, that a lot of people had losses. And so that was a year that we actually took advantage of doing something different than just going with the coverage that we went in the past. And that decision that we made paid out in the long run. And so that's why I advise other people to do the same for your operation, is to look into some different ways that we can really just find a good crop insurance agent, or the decisions that we're making. I kind of keep going back to that, but it's all the decisions that we make. And so let's make good business decisions. And even if you got questions, reach out to me, because I can share my experience that I've had, and then maybe even pass you along to Landon if you've got additional questions. And I think it's something that would be a benefit for a lot of people, just to look into some different options that are out there that they could benefit their farm for sure.
Yeah, perfect. Well, thank you, Garrett. I enjoyed the time.
Yep. Thank you, Landon. And we'll catch you guys next time.
Thanks for tagging along with me today as we sharpened our mindsets. If you've gained insight from today's episode, be sure to take a screenshot to share, or send this episode to somebody who might also find value in it. For more, follow me on Instagram @GarrettRuskamp or on Facebook, and join me next time for more conviction through clarity.